Hi guys, it's Francine Carrillo Walters with Walters Asset Protection and Mortgage. Now we've talked about the term life, we've talked about the GUL. Now we're going to talk about the Ferrari in the series, right? We started Camry, Lexus, now here's our Ferrari. This is our life insurance retirement plan. So this one has a retirement aspect. Remember at the end of the previous video, at the end of our Lexus, I said that the con with a Lexus is that while they're holding your money, yes, you can get a return of premium rider, but your money's not growing while they're holding it. A life insurance retirement plan would take care of that. If you haven't seen my very first video that explains how money grows, I recommend you go see it because then you'll understand how your money is growing in a LIRP, in an index account. So you have zero risk, no market risk. You have a 0% floor. That means you can never lose money. It's always going to be what you put in or more, right? On those years that the market doesn't do well, your account would earn nothing. But when it does well, your account is going to grow. So your account is growing without market risk. Very important. Now, there's a con, right? Everything has a con. There is another bucket that this is the bucket holding your money. So your money is, we're putting all of your money in this bucket. Some of your money is going to leak into this bucket, right? So these fees that it's leaking to are life insurance. So let's say this is a death benefit of $500,000. Like the previous examples, again, you have a death benefit, you have a living benefit. Okay? So some of our living benefits in LIRPs have up to 100% of your death benefit or $1 million, whichever is less, access while you are alive. They give you an advance of that death benefit if you have a chronic or a critical illness. And what is a chronic illness? A chronic illness is dementia, Alzheimer's, anything where you're going to need a nurse. A critical illness is cancer, heart attack, stroke, and things of that nature. There's very long lists of both, but each carrier is different, and we would have to look at that together. So based on which carrier we would choose, right? Based on your goals. So yes, we have these fees, but these fees are getting you life insurance. They're securing your family, your assets in the event that you pass away. They're also securing you while you're alive with living benefits if you get a chronic or critical illness. Guys, you pay fees to a 401k, a 403b, an IRA. You actually pay 1.5% to 4.4% in fees out of your principal balance every year with these guys. Here, yes, you're paying fees, but it's for a benefit. You benefit from this, okay? So your money is growing in an index account. Again, this money is savings, future retirement money. And that money that you can start drawing out at retirement comes to you tax-free. Tax-free. How do we do that legally? Tax code 7702-A. Because it's growing in an investment grade insurance policy, we're able to use tax code 7702-A which makes your money coming to you tax free. I know somebody, she is retired and she draws money out of her IRA for her long-term care, and she draws out 96,000, only receives 60,000 after it has been taxed. So this money, if she had her money here, she would be receiving all 96,000 tax free. So that's something that a lot of the time people don't think about when they're putting money away for retirement. They're not considering that you're not getting every dime you put in there. You have to remember it's going to be taxed when you bring it out. Now, if you access it before you're 59 and a half, you also have to deduct that 10% penalty plus the 33% in tax, right? So a life insurance retirement plan comes with something I like to call perks. So I'm going to write perks up here to make sure that you can see it. And I'm going to put tax free 7702-A here because that's very important. And we're talking about the perks. The perks these plans come with. Okay, so P is for protection. Guys, your family is protected. You are protected, but not only that, you are protected from anybody that wants to sue you, because this type of policy is creditor safe. That means you can't be taxed, sued, and it can't be levied against. So you have lots of protection here. Now, why is that important for retirement money? I know two elderly people. One of them, the IRS called her and said, you did your taxes wrong in 2012, so we're going to be taking $600 from your Social Security until that's paid up. And they haven't told her when that is, so they just keep taking it. The other friend, they took her entire Social Security payment. So she had to move in with her son because she lost that income. And the IRS is not giving them an explanation, and it's a big mess, and you don't want that. So here, when this retirement money is coming back to you tax-free, the IRS can't touch it, so you're protected. Okay, emergency money. Let's say I am in my 40s and I need to access some of my money that's growing in this account because I have a family emergency. If it was in one of these, I would have to pay a 10% penalty. But because it's here, I don't have to pay that 10% penalty. And remember, it's coming out tax-free. So I'll be using less of my money. So it'll get to grow and compound. Retirement money. Just like I've been talking about, that money, you will receive a stream of income out of this for your retirement. College savings. So some people buy a 529 plan for college savings, but then they're restricted to what they can use that money for. Here, you can use it for college, for your children, for yourself. You can use it for savings in general. You can take yourself on a trip or make your a fancy back patio. This is your money, and you get to decide how you use it. You don't get penalized. No 59 and a half rule, no 72 and a half rule. You don't have to take required minimum distributions out of this. This is your money. This bucket is growing for retirement. Even if you need to access living benefits, this continues to grow over here for your savings, for your future, for your retirement. If you have a critical illness, let's say you have stage 2 cancer, most people live through that, right? So your retirement money is still going to be growing. You're not going to lose your savings because you get an advance of your death benefit to help you deal with the cancer expenses, right? So this is our Ferrari in this series, our life insurance retirement plan. And it's the fancy car that gives us that when they're holding our money's still growing. We also have a retirement plan built in here. So now I've talked about all the pros. Now, what are the cons? Everything has cons, right? So, what are the cons? The cons. Let me see that, yeah. The cons are that it is a long term plan. Okay, so this is a long term plan. If you open one of these and you close it before 10 years, you're going to lose money. Okay, this is not the plan for you if you want a short term investment. This is not a short term investment. Now, the wealthy have been using these plans since 1904. They actually buy these plans for their babies ever since they're 2 weeks old. Walt Disney leveraged one of these plans to build his park in Florida. John McCain leveraged one of these plans to fund his campaign. Every president has one of these plans to shield some money from taxes and have it grow tax-free and draw it out tax-free. The wealthy people know these secrets. And it's time that you know them too, and that you are able to use these secrets to benefit you and your family. So this is a great way to establish generational wealth, grow money tax-free, give yourself access to money. Now the other con, guys, you will need a medical exam. You cannot get out of it with these plans. Now, they might not draw blood and do the entire physical. That's done at random. Some people just get a phone call and have to answer medical questions over the phone and get approved. So it just depends on the luck of the draw there. Okay, so typically a medical exam, and this is a long-term plan. That is the con here. So I hope you enjoyed learning about a life insurance retirement plan, and maybe it's right for you, maybe it's not. We have a variety of options. So I look forward to seeing you at our next video, and look in the description for contact information if you have any questions for me.